guys, good evening everyone. Good evening all of you. How are you all? Hi Pratibha, good evening. Good evening everyone. Am I audible to everyone? Am I visible to everyone? Hi Pari. Hello. Good evening. Everything is clear, audio, video, everything is good, working fine, yes or no? Hi guys, good evening everyone. So first of all, a very congratulations to everyone who have cleared their IEIFS examination. It was a great day, it was a great result. I have got messages from lot of you bankers who have cleared their examination. So now it's the time we have to prepare for the PPP. Now it's the time we have to start the PPP smart and structured revision, right? So as I have already told you in the last 7 days of strategies that you don't need to study everything again in this last 7 days. Please don't do that. We just have to focus on the most important thing. We have to focus on the repetitive topic because we have only 7 days and PPP is quite a lengthy syllabus. We have total of 55 units in the PPP, right? So we don't have to focus everything again. We just have to focus on the topics which are high weightage topic, which are relevant for your examination, right? Which is very repetitive, which was asked in the PYPs, that we are going to focus in this capsule batch. Plus, this is a capsule batch, so we are going to focus one module in one day. Okay, we are going to focus what? One module in one day, right? Arjun, congratulations. So please kindly just write your marks, everyone who have cleared their examination. Just I want to see who has scored what. Sorry. Hello Arjun. Hello Ramyam. Pratibha. Krishna. Everyone. Too good, Ramyam. 62, too good. Gopinath, 57, 66, 56. Very nice. Vignesh, 57. So you all have cleared your examination, right? So yes, it's a very good thing. Everyone, I have received a lot of messages from you all that we have cleared the examination, ma'am. And the paper was quite easy. It was almost moderate to easy level, not difficult level paper, right? So IEIFS hangover is finished. Now we have to focus on the PPP, everyone, right? So today we have to start this module A and we have to finish the module A. 21 chapters are there, more than 200 pages in this PPT. So we have to focus today on this particular revision. I'm not going to take too much time in one topic because I know that you have already read it in the foundation batch, you have already read it in the crash course. Only we have to focus and just revise the complete thing quickly. Yeah, so it was easy paper. I know it was very easy paper, right? So I think let's start discussing. First of all, in the bank customer relationship, we have to just discuss about the different bank customer relationship, like the debtor and the creditor. So we all know that the customer can be debtor and creditor both, and the bank can be the debtor and creditor both in different situation. So if the bank is giving a loan to the customer, like bank is giving car loan or house loan to the customer. Now, because bank is giving loan to the customer and customer has to return this loan, so customer is called as the debtor, and in this case, bank is called as the creditor when the bank is giving loan to the customer. But when customer is depositing their amount in the bank, like for example, a customer is depositing the amount in the current account or saving account. Now, in this case, because the bank has to return that money on demand to the customer, so in this case, the customer is called as the what? The customer is called as the creditor, the one who is giving the money, and the bank is called as the debtor on whom the amount is due. So in debtor-creditor relationship, both can be the correct one. The bank can be a customer, a creditor as well as a debtor, and the customer can be a creditor as well as the debtor. Now, bank as a trustee. Before bank as a trustee, let's talk about the bailor-bailee relationship. Before that, let's talk about the bailment. So, bailment is simply The act when the asset is given by one person to another person for some specific reason, that is called as bailment. Okay, so when one person is giving some asset to another person for some specific reason, that is called as the bailment. And the one person who is giving, that person is called as the bailer. Okay, and the one person who is receiving, that person is called as the bailee. Okay, so in bank customer relationship, customer is giving their valuables to the bank for the safety and security of that item. A customer is depositing their shares in demat account to the bank for the safety and security of that particular paper, or a customer is giving their property papers for the safety and security to the bank. So customer is delivering a particular asset to the bank for a specific reason. That reason is security, right? So in this case, because the customer is giving, so customer is called as the bailer, and because the bank is receiving, so bank is called as the bailee. So bailee is responsible for taking care of the goods that has been given by the bailer. So in the same case, the bank is also acting as a trustee to whom the customer is trusting. So when a customer is depositing any valuable item to the bank for the safety and security of that item, that is called as the contract of bailment, and the customer is the bailer and the bank is acting as a bailee or a trustee. Okay, then agent principal relationship. First of all, who is an agent and who is a principal? So principal is the one person who is giving order to the agent to perform some specific function. An agent is the one person who is performing some specific purpose or some specific function. Like for example, I am giving order to Pratibha that in my absence, you are responsible for taking care of this class. So Pratibha is the agent and I am the principal. Now in bank customer relationship, when the bank is actually doing some work on the behalf of customer, like the bank is collecting check on the behalf of customer, paying regular bills, premiums, club fees, insurance, telephone bills on the behalf of the customer. So in this case, the bank is actually serving as an agent of the customer. It means the customer is the principal, the one who is giving order, and bank is the agent, the one who is fulfilling that order. Then we have the lesser lessee. So bank has lot of locker space which is given on a lease, right, to the customer. So bank has a locker space. Bank always give that locker space on a lease to the customer. Now because the bank is giving that locker space on a lease to the customer, so bank is called as the lessor, the one who is giving. And because the customer is receiving that locker space on a lease, so the customer is called as the leasee. And leasee is responsible to give lesser the lease rental. When the customer is receiving that particular locker on a lease from a bank, then the customer is responsible for giving the lease rent to the bank, right? Now, indemnifier and indemnified. So, in this, there is actually a contract of indemnity. Contract of indemnity means where one person promising to another person that if you suffer any loss from any reason, then your loss will be compensated by me. Okay, so that is called as the contract of indemnity. Okay, so the one person who is promising is called as the indemnifier, and the one person who is being promised is called as indemnified or indemnity holder. Now, what is the use of contract of indemnity in the bank? So, I am a customer. For example, I have lost my original demand draft. Okay. Now, I go to the bank and requesting bank that please issue a duplicate demand draft since I have lost my original demand draft. Now, in this case, the bank will agree to issue me a duplicate demand draft only if I sign a contract of indemnity with the bank. The bank is saying that since you have lost your original demand draft, so you have to promise me that in case that original demand was found and misused by anyone, due to which banks suffer any financial loss, then that financial loss will be compensated by you because you have lost that original demand draft. I agree. I signed that contract of indemnity, where I promised to the bank that if that demand draft was misused and due to which the bank suffer any financial loss, then that financial loss will be covered by me. So I am promising. I am the customer. So I am called as the indemnifier. Customer is the indemnifier and bank is indemnified who is receiving the promise or indemnity holder, right? So this is the bank customer relationship. Any doubt in this, everyone? Prakash, congratulations. Prakash, congratulations. Very good score. All of you, very good score. Okay, any doubt in the chapter 1? Everyone, if you have any doubt, quickly ask. No doubt, just quickly tell me. Everyone, no doubt, everything is clear. Can we move forward to the next topic? Everyone, no doubt. Okay, Pratibha, no doubt. No doubt, everything is clear. Right. So let's move to the next topic, that is the AML and KYC guideline. Right. So first of all, let's talk about the stages which is involved in the money laundering. What is money laundering? Simply the process of laundering the dirty money. It means that whenever the money is generated from illegal activity, that money is infused into the financial system as if it was generated from some legal source, right? So that is called as the money laundering. So we have three stages in the money laundering: placement, layering, and integration. Okay, so placement means the very first step in the money laundering is placement. It means that whenever the illegal money is earned from dirt trafficking or any other smuggling, right, that illegal money first thing is actually placed into the financial system by opening the account in the bank. So the account is opened and the money is placed into that bank account. That is called as the placement. This is the first step. Second step is the money laundering is layering, either moving that money into different bank account or layering that bank account with some good transaction so as to hide the original source of that money. So that is called as layering. This is the second stage. And the final stage is called as integration. So when the money is collected from different account and then that money is utilized to purchase some legal asset or to start some legal business, that is the integration. So the final money, that illegal money, is actually placed into illegal activity. So first is placement, second is layering, and the third is the integration, right? Now, when we are talking about the placement, layering, integration, I have given the definition here. Now we have four stages of terrorism financing. Remember, three stages of money laundering and four stages of terrorist financing. Sorry. The very first stage of the terrorist financing is raising. So the first step is that terrorist organization actually raise money from their sympathizers, okay, from different part of the world. They actually first started raising money from those people who sympathize with that terrorist organization. Second is moving. Because the money is generated from all over the world, then that money is moved to the place of origin of that terrorist organization. That is called as moving. Finally, that money is stored until that task is being executed, because whenever the money is raised by a terrorist organization, that money is for some specific purpose. So until that specific purpose, that money is being stored. Either it is invested into some activity which actually multiplies the money, or it is put into different bank accounts. That is called as storing. And when finally the time is come, then the money is utilized for carrying out the terrorist activity. So these are the 4 stages of terrorist financing. Now, when we are talking about the anti-money laundering framework in India, so based on FATF recommendation, Financial Action Task Force recommendation, there is anti-money laundering framework which has been introduced in India. FATF is the organization which is responsible for formulating policies for combating the money laundering throughout the world. Right? So we have some special anti-money laundering framework in India. Like in India, we have the Financial Intelligence Unit India, which is the organization formed to receive the financial information on the transactions from every bank and financial institution. So if there is any suspicious activity in the bank or financial institution, the immediate report is sent to FIU India. Then we have the Enforcement Directorate, the one who is responsible for investigating into the matters of money laundering. So they have the power to investigate and prosecute anything which is related to the money laundering. Then we have the special court who pass the final judgment that whether you are guilty in this case or you are not guilty. And if you are guilty, then the special court has also the power to freeze the asset. So if there is any asset which is purchased from the illegal money, that asset is confiscated, or you can say freezed by the special court. And finally, we have the regulators like we have Reserve Bank of India or SEBI or IRDAI, who actually guide their organization that how you can follow the Prevention of Money Laundering Act or the Prevention of Money Laundering rules and regulation. So this is the anti-money laundering framework in India. Then the money laundering offenses. So section 45 and 4, very important. Section 45 of Prevention of Money Laundering Act says that this money laundering is actually a cognizable and non-bailable offense. Cognizable means you are arrested without any arrest warrant. If there is any, you can say, if there is any minor suspect on you that you are involved in a money laundering case, that you can be arrested without any arrest warrant. And non-bailable means you will not get bail. So 45 defined this, and section 4 defined the punishment. So the punishment in the case of money laundering can be not less than 3 years, means you can sent into the jail between 3 years to 7 years. But in some cases, it can goes up to 10 years also. Okay. Now, know your customer policy, KYC. So in the early days, bank used to take or open the account of new customer when the new customer is verified by the old customer. That process you all know. But this was not possible in every case. Maybe the bank is opening the new branch. So in this case, it was very difficult for the bank to acquire the new customer. So the bank introduced this KYC policy. KYC is the process of identifying and verifying the identity of your client. If I am going to a bank and saying that my name is Afreen Asmat, then the complete process of checking that, okay, I have presented my identity, I am the real Afreen Asmat, or if I am imposing anyone, the complete process of identifying and verifying the client identity is called as the Know Your Customer policy, right? So we have 4 key elements. If we talk about the major key elements of the KYC, we have more than 4, means 7 key elements, which we will be discussing in detail in the 3rd unit, means thus after this chapter, right? So we will be discussing it in detail, the 4 elements of the KYC policy in the 3rd chapter. Okay, next. Organizational setup for the anti-money laundering. So in every bank or financial institution, there should be 2 posts compulsory which should be there for the anti-money laundering. The first post is the designated director, and the second post should be for the principal officer. So these, every bank need to appoint these two posts, designated director and the principal officer. So designated director means you should have a appropriate functional setup. These are responsible for checking that the bank should have a appropriate functional setup for completing the KYC process. All the banks should have to keep the KYC policy updated, that is checked by DD. Then you should have a skilled staff, that is also checked by the DD. Finally, you have taken the measures that actually flexible with the changing complexities of money laundering or not. So these are all checked by the designated or director. Principal officer has the task that first they actually monitor that the bank has implemented the KYC or AML policy or not. They are responsible for maintaining the direct relationship with the law enforcement agencies. If there is any suspicious transaction, the PO sent the report to FIU India. They monitor all the AML system, right? So this is the main function of principal officer. Then we have the anti-money laundering team also in the bank. Anti-money laundering team, the complete reviewing the KYC policy, identifying due diligence, submitting the suspicious transaction report to FIU India, monitoring the transaction to detect any type of suspicious activity, the customer risk categorization. These are all done by anti-money laundering team. So these are the three main things: designated director, principal officer, and anti-money laundering team. Every bank and financial institution should have this anti-money laundering framework. Then, what are the obligations under the Prevention of Money Laundering Act? First of all, every bank need to verify the identity of the customer. If I'm saying that my name is Afreen Asman, I have presented my documents, okay, like my Aadhaar. So the bank need to verify the authentication of that Aadhaar also, so that my identity should be confirmed. So verifying the identity of the customer. Second, the bank need to maintain all the record of transaction for at least 5 years from the date of transaction. If any transaction I have done today, the bank need to maintain the record for at least 5 years. Then maintain the record of the documents also. It means that, for example, I have closed my account in a bank today. That bank still has to maintain my documents for at least 5 years when I have ended my relationship with the bank. If I have continued my relationship, then the bank has to maintain my documents all time. But if I have ended, then bank need to maintain my record also for at least 5 years. Okay. Now, when we're talking about the risk management, okay, so risk management, we have first of all the risk-based approach. Risk-based approach means what? Risk-based approach means the bank should follow those policies which are focusing more on the risky customer and less on the non-risky customer. For example, if there is, there is a client who is dealing more in cash transactions, so bank need to engage their resources more on that particular client who is dealing more in cash transaction, because that is a risky customer for the bank. And if, for example, there is one student's account, okay, normal, the saving, the parent is giving them the money and they are just spending that money from the account, non-risky customer. So bank has to engage less resource on that non-risky customer. So depending upon the risk level, the bank has to engage their resources. That is called as risk-based approach. Risk assessment means the bank should take effective measure to reduce the impact of money laundering, right? So bank should properly investigate the methods, whatever the delivery channels the bank is using, like ATM or NEFT or RTGS, the transaction should be monitored properly and proper measures should be taken to just lessen the impact of money laundering or terrorist financing. Then in every bank, depending upon whatever the transaction that is done by the customer, a customer is divided into a high risk customer, medium risk customer, and a low risk customer. High risk customer means those customers who are doing or engage in some suspicious activity, or you can say they are doing more transactions in the cash, they are high risk customer. Then we have the medium risk customer, and then we have the low risk customer. Depending upon the type of transaction I am doing, I am divided into high, medium, or low risk customer. Then the bank should introduce new technology that should be very much effective with the changing complexities of the money laundering, because every day the laundering person, they are trying new methods for this activity. So the bank should have proper new technology which actually meet the changing complexities of this money laundering, and the bank should have a proper staff, and the bank should train that staff for the anti-money laundering framework. This is how the bank can manage their risk. Okay. Now, reporting obligation, very, very important part of this chapter. So every suspicious transaction report need to be sent to Financial Intelligence Unit India within 7 days of establishing the suspicious activity. If I have a doubt in any of the transaction today, I need to send that report to FIU India within 7 days of establishing that suspicion. Okay, the monetary value is not important, not relevant. Even the 1 rupee transaction, even 1 crore rupees transaction, or if the transaction has no monetary value also. But if I have doubt that there is something wrong in this transaction, that need to be sent to Financial Intelligence Unit India. Okay, but in addition of these things, there are 4 reports which need to submit to FIU India on every 15 of the month. What are these 4 reports? First of all, if there is any cash transaction which is done for of rupees 10 lakh or more, okay, that need to be submitted to every 15th, on every 15th to FIU India. Or if there is a series of transactions which are intentionally made to avoid this 10 lakh limit, so means you have the doubt in that person that that person is avoiding this 10 lakh limit, you need to report it to FIU India. Cross border wire transfer of rupees 5 lakh or more, you need to report to FIU India on every 15th. There is any receipt to a non-profit organization of rupees 10 lakh or more, report need to be sent on every 15 to FIU India. All the counterfeit currency note, duplicate note, the report need to be sent to FIU India. This is the reporting obligation, very, very important. Okay. And what if you are not following the obligations under the Prevention of Money Laundering Act? If any bank or any financial institution is not following the rules and regulation, then the PMLA, the director of FIU India, can just issue the written warning, take any action, or even impose the monetary penalty against that bank, employee, manager, or even the director of that bank. And the monetary penalty can be minimum of rupees 10,000 to the maximum of 1 lakh per violation. Okay, so that is the penalty in case of non-compliance of PMLA obligation, right? So this is the complete chapter. Now, if you have any doubt, please ask everyone who are watching this session. Any doubt? See, you don't have to leave the class, everyone, because every point, whatever I'm teaching today is too important for all of you. So don't miss out anything. Everyone, just don't miss out anything. Whatever you are studying here, don't just miss out anything, everyone. Okay, right? Everyone, clear? Any doubt? If you have, see, if you have any doubt, please feel free to ask your doubt. If you don't have any doubt, just quickly give me a thumbs up, everyone. Right. Done. Okay, can we move to the next unit? Right. So, operational aspects of the KYC. Now, in this chapter, we are going to discuss all the important element of the KYC. All the important element of the KYC. Right. So, the very first thing is we have these 7 important elements in the KYC. Okay, customer acceptance policy. So, customer acceptance policy says that a bank need to accept you as a customer. If I am going to a bank and I'm saying that my name is Afreen Asmat, if I am presenting every possible or relevant document of my identity, I am accepted as a customer from the bank. For example, I'm going to a bank and I'm saying that I don't want to tell you my name, please open my bank account. Or if I'm saying that my name is Superwoman, or if I'm saying that I am princess of so and so world. So now this is the thing in which you are not accepted even as a customer by the bank. So no account can be opened in any fictitious or benami name. You have to present your PAN for the verification. You can verify the digital signature. And if the bank is asking for any PAN, the bank cannot reject any financial services to the customer just on the basis of their financial or social disadvantage. Because in the bank can judge that, okay, you belong to a higher class or middle class or lower class. But if anyone is presenting your PAN, the bank should not deny any type of financial services just because you are from the socially or economically weak background. Okay. Next, if for example, bank is thinking that you are not fulfilling the KYC guideline properly. You are not fulfilling the KYC guideline properly, then the bank can take the decision to close the account also, right? Now, customer identification process. So, CIP is the process of identifying and verifying the identity of the client based on whatever the document and information you have presented. Okay. So, when CIP is needed, when you are opening the account, or when you are having any financial services from the bank, when you want to transfer the money, when the bank has doubt in any existing customer, or if you are actually receiving any services from a bank of a value of 50,000 and above, or if you are a walk-in customer and you want to deposit cash in some other account and the value of that cash is 50,000 and above, or if you are intentionally, if the bank is thinking that the customer is intentionally avoiding this 50,000 limit to avoid the CIP process, then in all these cases, customer identification procedure is needed. Compulsory, it is needed. Okay. Now, what are the important documents for the KYC, or you can say officially valid document for the KYC? Very important. So, passport, driving license, proof of possession of Aadhaar number, voter identity card, job card issued by NREGA, letter issued by National Population Register. These are all the officially valid document for the KYC. Know your customer policy. Okay. And remember, PAN is not included in the OVD. Okay, very important. Next, customer due diligence is also required for the non-face-to-face customer, means you haven't visited the bank branch for any transaction. You are OTP-based customer. So what are the restrictions on the OTP-based customer? Very important. First of all, your aggregate balance should not exceed 1 lakh. It should be 1 lakh or below 1 lakh. Okay. If the balance exceed 1 lakh, you should have to immediately submit any official valid document to the bank. And if you haven't submit this, then your account will be closed. Credit limit, you cannot have a credit limit of 2 lakh or more. So your total credits in all deposit account will be 2 lakh or less. Loan limit is 60,000 or less. Okay. Validity period for both the loan account and the deposit account is 1 year. Within 1 year, you have to complete your full KYC. If KYC is not completed, then the deposit account is closed, and in the loan account, no further dispersal is allowed. That is the restriction which is actually for the OTP based KYC account, right? Next, beneficial owner. Who is the beneficial owner? Any one person who is enjoying the benefit of the transaction. without the property being in its name. For example, for example, there is a company, okay, and the company, uh I'm the managing director of that company, right? The company has an account in the bank, so whatever the transaction is done in that account, I am receiving the benefit of that transaction because I am the MD of that particular company. So I am considered as the beneficial owner. So either that property is in your name, or you are holding a proper percentage in the ownership of that particular company. Means there are limit which is given. If you are owning more than this limit in any company, then you are considered as a beneficial owner. And for the beneficial owner, customer due diligence is must. Like for example, in a company, you should have more than 25% share in the capital or the profit. In partnership, you should have more than 15% share. In body of individual or association of person, you have more than 15% of the share. In trust means you have more than again 15% share in that particular trust. If you have more than this percentage in that particular association, you are considered as the beneficial owner. And if you are a beneficial owner, your customer due diligence is must, right? Now, in customer due diligence, we have, because you know that the bank is following the risk-based approach. So, bank is engaging more resources on a high-risk customer and less resources on a low-risk customer, right? So, we have the customer due diligence two types. There are the enhanced customer due diligence, which is required for a person who is a politically exposed person in a foreign country, or for a non face to face customer, we have enhanced due diligence procedure. But we have some accounts for which we have a simplified due diligence procedure. For example, if you are opening the account of a self help group, we have a simplified due diligence procedure. If you are a account or you are having the account of foreign student, simplified due diligence. If you have a small account, simplified due diligence. Now, let's talk about the characteristics of the foreign student account. First of all, for a foreign student, NRO account is offered. Okay, as a foreign student, you have to declare your local address within 30 days, and that local address need to be verified by the bank. For your account, the foreign remittance are allowed. If you are doing in dollar, then it should be $1,000 or less than that. Or in rupee, it is 50,000 or less than that, whichever is relevant. That is the maximum limit you can remit outside India. If you are a person who don't have any officially valid document, still you can open a small account in a bank. What are the limits on that? In a small account, the credit limit does not exceed 1 lakh annually. The withdrawal limit does not exceed 10,000 monthly. The balance limit shouldn't be exceeding 50,000, and foreign remittance should not be allowed. Foreign remittance should not be allowed. So these are actually what? These are actually the restrictions which are on the person who have the small account. And if you have a small account, you have to submit the officially valid document within 12 months of opening that account. Every point here is very relevant for case studies, everyone. There can be a lot of case study that can be asked from this unit 3rd and 4th especially. Okay, next, periodic trust updation. So you know that based on the transaction of the customer, a customer is divided into a high risk customer, medium risk customer, and a low risk customer. So if you're a high risk customer, your account is periodically updated in every 2 years. If you are a low risk customer, then in every 10 years, the periodic updation is done. And if you're a medium risk customer, in every 8 years, the periodic updation is done. Very important. Okay. Next, wire transfer. Simply, when the money is transferred from one bank account to another bank account using the different settlement network like FedWire or SWIFT, that is called as wire transfer. Now, if there is a cross-border wire transfer, means you are transferring money from one country to another, okay, then originator information is required. It means that if I am transferring money abroad, then I need to send my information also to initiate that transaction. But if the transaction is done between two banks or two financial institutions, like one bank is transferring the money to another bank across the countries, then for this, no originator information is required. Okay. Second, if there is a domestic wire transfer, you are transferring money domestically within the country. So originator information is required if the transaction amount is 50,000 and above. Means you are transferring money like 1 lakh or 2 lakh, then you need to send your information also to initiate the transaction. And if the banker is thinking that this person is intentionally avoiding the limit of 50,000, then it is must that it is a suspicious transaction. You need to report that transaction to FIU India, right? And always remember, whenever these type of transfer is done, the bank need to maintain the record of these transactions for at least 5 years. That is the information preservation. Very important is the central KYC record registry. Have you ever wondered whatever the documents you are submitting to the bank for the KYC purpose, where are these documents stored? So there is a entity which is called as Central KYC Record Registry. That entity is responsible for receiving, storing and safeguarding the complete documents of a person in a digital format. And Government of India has authorized CERSAI to execute and perform the function of Central KYC Record Registry. Very important. Now this we have already discussed. The bank need to maintain the record of the transaction for at least 5 years. Plus they have to preserve the documents of the customer for at least 5 years after the business relationship end. Right? So this is the complete unit 3. Now if you have any doubt in the complete unit 3, please ask everyone. Quickly, if you have any doubt, please feel free to ask your doubt. If no doubt, quickly give me a thumbs up, everyone. Everyone, you guys, if you have doubt, ask. If you don't have any doubt, just you need to give me a quick thumbs up. Done? Nilimak, why? Okay, done. What we have to revise, Moria, just ask your doubt, whatever doubt you have. No doubt, can we move forward? Everyone, just quickly tell me. Can we move forward? No doubt, everything is clear? Right. Now, let's talk about this opening account of various type of customer. Okay, so what are the different type of customer? First of all, the account of individual. Okay, so as a banker on a daily basis, you are dealing with different type of customer, right? First is the individual. So account of an individual can be opened in a single name as well as it can be opened in a joint name. That individual should be measured by age. That individual should not be insolvent or should not be disqualified from contracting any law. That person should be of sound mind. In case of the minor, there should be the court appointed guardian or natural guardian who is signing the form on the behalf of that minor. And KYC is compulsion for both that minor and that particular person. Okay. Next, joint account holder. So, joint account, yes, it is allowed. When 2 or more person, they are opening the account, it is advisable to the banker that you should know the amount of fund which is expected in that particular joint account. The relationship between that 2 or more person should be known to the bank. If you are a brother, sister, or mother, or daughter, or if you are, whatever the relationship between that person, it should be known to the bank. The joint account form should be signed by all the account holder, right? And whenever we are talking about the joint account, any resident Indian can easily open the joint account with the resident Indian. In fact, the resident Indian are allowed to open the joint account with the NRI also, provided that there should be a close relationship between that resident and that NRI. Okay, next, account of illiterate person. The account of illiterate person, yes, it can be opened. First thing is, the banker need to explain the terms and condition of that account in whatever the language that particular person is comfortable. And it is advisable every time that person need to withdraw the money, they have to come personally to the bank with a passbook. Current account is not given to the illiterate person. Very important. Checkbook cannot be issued to the illiterate person because there is a signature issue. If that illiterate person has a signature issue, then left hand thumb impression is taken from that person. Every time that person is withdrawing the money, that particular money should be orally confirmed by that particular account holder. Then, account of a blind person. Blind person, yes, it is allowed. If the manager is satisfied that this blind person can easily manage the account independently, they can allow that person to operate the account independently. Right? Next is the account of minor. Very important, very relevant for the case study. There can be a lot of case study from this particular topic. Okay. First, there is a basic age which is given. The bank is allowed that if there is a minor who has the age of 10 years and above, they can open and operate the account independently. Right? Next thing, every bank can fix their age independently also. Base age is given 10 years, but the bank can allow it at the age of 12 or 15 or 18, whatever the bank decide. Okay. The account opening form should be signed by the guardian also, by the minor also, and the KYC is done for both the one. Father is considered as a natural guardian, but in case father is absent, mother can also act as a natural guardian, but a stepmother and a stepfather, they are not included in that guardian, or you can say in that particular you can say in that list, that natural guardian criteria or term, the stepfather and stepmother's names are not included. Okay, the minor should be literate, and very important thing is, two minor cannot open a joint account. Okay, so a minor account cannot be overdrawn. Very important. Okay, once the minor reach the age of majority, the guardian is immediately stopped from operating the account of that minor who is now major. The bank are free to fix the minimum age. The base year is given 10 years, but you can also fix a higher age depending upon the bank policy. If the minor died, the guardian has to close the account. But if the guardian died, then the minor will receive the balance of the account when the minor attains the majority age. Next, Hindu undivided family. Simply when a Hindu died, leaving a property or a business behind, that is passed on to their legal heir, and that become a Hindu undivided family. In a Hindu undivided family, the eldest male child is called as the manager or the karta, who has the unlimited liability. And if we talk about the other family members, these are called as the co-partner. And their liabilities are limited to the extent of shares they have in that Hindu undivided family. According to a ruling in a Delhi High Court, the eldest female child of a Hindu undivided family can also be its karta. Very important. Plus, earlier, only the unmarried daughters can be the co-partner, but now the married as well as the unmarried daughter should be or can be the co-partners of a Hindu undivided family. Right? Next, sole proprietorship firm means any account or any firm which is operated by one person only. And the rules are same with the individual account. Only one difference. If it is a firm account, then it is given for the business relationship. And if the account is for business relationship, then the current account is offered to that person. Okay. When the individual account is concerned, saving account is given to that person. But a sole proprietorship firm is given only the current account, not the saving account. Okay. Next, partnership. What is partnership? It is defined under Section 4 of Indian Partnership Act 1932. When two or more persons decide to share the profit and loss on a business, that is partnership. Partnership registration is optional. Only two states it is mandatory, Gujarat and Maharashtra. In case if there is any dispute among the partner, immediately if any one partner has given this instruction to the bank that you have to stop the transaction in the joint account of the partnership, then immediately bank need to stop all the transaction, and the account can be operative again only if all the holders, all the firm partners jointly given their consent to restart the activity again. Very important thing is, if there is addition of any new partner in a partnership firm, the old account can be continued only if the account has the positive balance. If the old account has the negative balance and a new partner need to enter into that firm, then the old account need to be closed. The liability of the partners is decided, and then new account is opened in the case of the new partner is entering that partnership firm. Whenever any partner died in a partnership firm, it actually completely dissolved the partnership. And so the account need to be stopped. The liability of the partners need to be decided. Okay. Then in a partnership, we have a limited liability partnership. Limited liability partnership means where the partners' liabilities are limited to the extent of share they have in the partnership. In a limited liability partnership, there should be at least two DPIN or designated partner who should have a DPIN, means designated partner identification number. In a LLP, there is a small LLP. A small LLP means if the contribution of the partner should not be exceeding 25 lakh and their turnover should not be exceeding 40 lakh, then this is a small LLP. But in case the contribution is exceeding 25 lakh and the government has given the exclusive permission, then it can exceed 25 lakh, but it cannot exceed the topmost limit of 5 crore. If the turnover exceed 40 lakhs, yes, it can exceed. If the government has given the exclusive permission, but the topmost limit is 50 crore, it cannot be more than that. So that is a small limited liability partnership. Then we have the limited companies. So we have a public limited, private limited. See, public limited company where there is 51% share or more than that is in the hand of central or state government. Minimum number of member required is 7. Maximum there is no limit. And the shares are freely transferable in the case of public limited companies. Private limited company, where the share of the government, either central or state, is less than 51%. Minimum number of members required to open a private limited company to maximum can be 200, and there are restrictions to transfer the share. Third, we have a one-person company. One-person company means that company which is operated by one person only, and it is a private limited company. It is not a public limited. Then, what is the condition for you to open a current account? Okay, so first condition is if you have any borrowing arrangement means you have any overdraft or cash credit or loan facility going on, then yes, there are restriction on you to open the current account. If you are a virgin person, raw person, you don't have a loan account, you don't have any cash credit or overdraft facility going on, right? Then in this case, you don't have any restrictions on opening the current account. You are free to open the current account wherever, in whatever bank you want. Now let's talk about the restriction. See, if you are a person who have this limit of less than 5 crore, means you have overdraft, cash credit, loan ongoing, but altogether is less than 5 crore, then you are there is no restrictions on opening the current account. You can open the current account in any bank, provided that if you exceed this 5 crore limit, you have to immediately inform your bank that you have crossed the 5 crore exposure limit. Second, if you have the ongoing overdraft, loan, cash credit, altogether the limit exceed 5 crore, then you can open the current account only in those bank in which you have the loan or cash credit or overdraft facility. If you have taken these from 4 bank, then you are allowed to open the current account in all these 4 bank only. Second thing, that bank should contribute at least 10% in your total exposure. So for example, in whatever exposure you have taken, 50% is from this, then 5% is from this, then 20% is from this, and the rest is from this. Then you are allowed to open the account in those banks who have contributed in your exposure of at least 10%. Means in this bank you are not allowed. Yes, in the rest of the 3 banks you are allowed, right? So this is the restriction for opening the current account. Then legal entity identifier, very important thing. Legal entity identifier, it is a 20-digit alphanumeric code which is given to uniquely identify the parties if they are involving in the global financial transaction. It is very difficult to give the exact identity of that particular company who is involved in the global transaction, because there are a lot of companies of similar name. So, to uniquely identify each and every company who are involved in the global financial transaction, there is a 20-digit alphanumeric code which is given to that particular company, right? Next, important thing is, if the bank, any customer in the bank, the corporate is coming to a bank and that corporate is asking a loan of rupees 5 crore and above, then the bank must insist that borrower to obtain a legal entity identifier registration, because without that you are not allowed to give the exposure of rupees 5 crore and above to that particular corporate. Similarly, if there is any borrower, okay, especially in the corporate, who are asking the exposure of rupees 50 crores and above, then you must insist that person to obtain a legal entity identifier registration. Clear? So this is legal entity identifier, and this is the complete chapter. Any doubt? Vamsi Krishna, the eldest male child is the Karta of a Hindu undivided family, right? But according to a recent ruling in the Delhi High Court, I think 2008 ruling, if there is a eldest female child, that female child can also become the Karta of Hindu undivided family. Okay? पहले female elder allow नहीं थी. Yes, पहले फीमेल एंटर्स अलाउड नहीं थी, अब अलाउड है. और अब डॉटर जो कि मैरिड हो या अनमैरिड, वो को पार्टनर बन सकता है. Restrictions to open the current account. Restrictions, what are the restrictions? Like I have given you the thing that if you have an exposure of rupees 5 crore and above, then you are allowed to open the current account in any of the one bank in which you have that particular exposure facility, provided that that bank should contribute at least 10% in your total exposure, right? What minor account is opened with the uncle? If uncle is the court appointed guardian, then yes, it is allowed. Natural guardian, no. Uncle cannot be the natural guardian. Right? Any more doubt? Anyone? See, quickly ask if you have any doubt. Okay, so let's move forward. Okay. See, proprietorship firm and one man company. See, one man company, you have to follow all the conditions related to the company, and that company should be a private limited company. Only the documentation can be different. Else, both are offered the current. No difference in the actual current account facility, but yes, you have to follow different documentations. Okay, right? Right. Now let's move forward. Okay. Right. So let's talk about the operational aspects of the deposit account, which is unit 5. So there are different type of deposit account. Okay, let's start discussing with the current account. Current account is offered for the business transaction if the individual or institution want to engage in the business transaction where the funds are fluctuating on a very wide basis, on a daily basis, then the current account is offered to that individual person. In a current account, no interest is given on the deposit which is held by the bank. Now, who cannot open the current account? Very, very important thing. Who cannot open the current account? So, if you are a minor, okay, current account is not offered to you. Hence, there is one flexibility which is given, very relevant for the case study, everyone. So, usually, the minor is not allowed to have a current account. But in case there is an emergency that a minor need to open a current account, then the natural guardian can open the current account on the behalf of the minor. Pardanasheen woman. Pardanasheen woman means any woman who is completely in veil. See, I am doing this hijab, but my face is visible to everyone. I am not restricted to open the current account. Okay. But there is a woman who is completely in veil, means only the eyes of that woman is visible. Now that person is restricted to open the current account. Illiterate person, current account is not allowed. Blind person, current account is not allowed. Okay. Next, temporary overdraft. Yes, in the current account, there is a provision if the person has given the written request or issue a demand promissory note, then on the basis of that, only the trustworthy customer can open the temporary overdraft account. Next, saving bank account, it is given to individual as well as in the joint name. And it is for inculcating saving habit in that individual. It can be given with deposit check facility or without check facility. Interest is given on the funds which are parked on the saving bank account. The interest is for the first 1 lakh deposit, every bank has to offer a uniform interest rate. And for the deposit over and above 1 lakh, then the bank can follow the differential rate of interest policy. Who are eligible to open the saving account? Saving account can be opened to the individual, can be open in the individual name. It can be open in 2 or more persons' name. Minor who have the age of 10 years and above, Karta of Hindu undivided family, and any entity who are given exclusive permission from RBI, then yes, they are allowed to open the saving account. Very important is BSPTA account. Very important. At least 2 question I am saying expect from BSPTA account. Yes. Basic saving bank deposit account. It is offered to those people who belong to economically weak background. No minimum balance is required if you want to open a basic saving bank deposit account. In this BSPT account, there are minimum free services. These are the basic minimum free services which should be offered to the BSPTA holder. Like, first thing is the deposits at the cash or ATM. You can do without any cost. Okay. Transfer the money through the electronic channels without any cost. You can transfer. No limit on the number and the value of deposit per month. Free of cost. In the BSPD account, you can deposit any number or any value of deposit per month. Minimum 4 withdrawals should be given free of cost in the BSPD account. Over and above that, bank can charge, but minimum 4 withdrawals should be given free of cost in the BSPD account. Okay, ATM card, debit card should be given free of cost. Then, checkbook is not a mandatory free service, but if the bank can, they can give. Bank can also charge for issuing the checkbook, right? Then bank can offer the value addition services also in the BSPD account, but there are different conditions for that. First condition is it should be at the will of the customer. If the customer don't want to avail, the bank cannot force them. No minimum balance you can impose for that value addition services, right? Any person cannot maintain the saving bank and BSPDA account together. No, you are not allowed to maintain both the account together. Not at all. If you have opened the BSPDA account, you have to close your saving bank account within 30 days of opening the BSPDA account. So that is all the characteristics of basic saving and bank deposit account. Then FD account. FD account attracts the highest rate of interest. FD account means the money is parked for a specific period of time and you will receive the money after the maturity time period. The minimum time period is 7 days and the maximum time period you can hold the FD is 120 months. Now, if you have an FD of 3 crores and above, in the case of scheduled commercial bank and small finance bank, and in case you have 15 lakh and above FD in RRB, then it is considered as a bulk deposit. But please recheck it once again because I am thinking that it is actually updated. Okay, so this you can say bulk deposit criteria is actually updated recently, so please check it. It is important. So updated amount, I think I will give you in the final marathon. Okay, I will tell you, I will frame a question from this updated bulk deposit amount. Okay, now if you have an FD of 15 lakhs and below, right? FD of 15 lakhs and below, then the bank must give you the premature withdrawal facility. Okay, next, recurring deposit. It means that you are not depositing the complete amount in lump sum. Instead of that, you are depositing a regular amount on a regular interval for a specific period of time. That is called as recurring deposit. Okay, instead of giving the lump sum 1 lakh rupees in a FD, you are, instead of doing that, you are depositing a regular amount on a regular interval for a specific period of time. That is called as recurring deposit. Annuity deposit, opposite of the recurring deposit. You are withdrawing a regular amount on a regular interval for a specific period of time. That is called as the annuity deposit. Okay, next, certificate of deposit. Certificate of deposit is the short-term financial instrument which is issued by the commercial bank. Any scheduled commercial bank, regional rural bank, small finance bank can issue this. Minimum amount you can invest in a certificate of deposit is 5 lakh and the maximum you can invest in the multiple of 5 lakh. Minimum time period 7 days, maximum time period 1 year. That is certificate of deposit. Next, interest on different type of deposit account. Okay, so interest on the domestic, first of all, current account, no interest is given, only in one condition. If that owner of the account is died, so from the date of the death of that person till the fund is transferred to the legal heir account, that time period the bank need to give the interest rate. Else, other than that, no interest is given on the current account. Now, domestic saving bank account, everyone. So yes, bank for the first 1 lakh rupees, bank has to give the uniform rate of interest And for the balance of over and above 1 lakh, the bank can follow the differential rate of interest policy. Okay. Now, highest interest is attracted on the term deposit. But minimum you have to hold that FD for 7 days for receiving the interest benefit. If you have withdrawn that FD within 7 days, then no interest is given to you. Clear? The next thing is additional interest rate. Yes, it is allowed on the domestic saving account. 1% for the staff and 0.25 to 5% for the senior citizen. Next, if the bank has freezed any account, freezed any account means, for example, you have not followed the KYC properly, so bank decided to freeze your account. Even if the account is freezed, whatever the fund which is present in that account, the bank has to regularly credit the interest on that freezed account. Okay, so that is the interest on the deposit account. Let's talk about the DEF, very important, Depositor Education Awareness Fund. If there is a dormant account, means there is the owner of that account who haven't touched that account for a straight 10 year. No transaction is made on that account. So after that 10 year, the amount of that account need to transfer to the DEF account by the bank, right? So after the 10-year time period, the bank need to transfer the dormant deposit to the DEF account. And this, whatever the deposit present in the DEF account, it is used for depositor education and awareness program, or if there is any fees which is needed in the banking ombudsman scheme, or for any research and development in the area of financial product. The bank can utilize the fund in the DEF account for any of these reasons. But for example, that customer come back and says that no, I want my money back. So bank first have to claim the refund from the DEF account, and then the bank has to return it to the customer. Okay. And for all this period, the bank has to give them the interest of 3% simple interest per annum. So that is depositor education and awareness. Now, what is a garnishee order? Everyone, very, very important. Understand what is a garnishee order. Garnishee order is an order which is issued by the court to the bank, which is called as garnishee, in favor of the judgment or in favor of the creditor. Simply, for example, A has given the loan to B. Okay. Now, B is not returning the amount to A. Now, A goes to a court for having a garnishee order. So the court actually just track that B's account is in, for example, XYZ bank. So court issue a garnishee order to XYZ bank, which is called as garnishee, in which the court is ordering this XYZ bank that you have to freeze a certain balance in the debtor account and directly credit it into the creditor account. That is called as garnishee order. Garnishee order is not issued directly. First, the order nisi is issued, which is the primary step, the first step. In this first step, the bank can present their verdict that if the bank is not able to attach the balance in the garnishee order, what is the reason behind that? And after the order nisi, the final judgment is passed in the garnishee absolute. So, in the garnishee order, first, the court issue the garnishee order nisi, okay? And once the bank receives the order nisi, the bank has to immediately freeze the customer account. Any check written, no more debit is allowed, okay? Second, in the order nisi, the bank has to report that order nisi to the customer immediately. Okay, and after that, the order absolute is passed, in which the bank has to freeze the certain balance and directly credit it into the creditor account. That is the garnishee order. Now, key principle of the garnishee order is, first of all, it is applied only on those balance which is present at the time of order nisi. For example, if at the time of order nisi 2 lakh rupees is present in that customer account, only the garnishee order is only applicable to this amount. It is not applicable for the future credit. Future credits are not involved. first of all. Second, the bank can just exercise their right to set off first. If the bank has to set off any balance of that customer, the bank first set off that balance with the customer, and then the rest of the balance the bank can attach to the garnishee order. Whatever the check is there, the bank need to return that check. And finally, the joint account. If that person is also having the joint account with any other person, the joint account balance cannot be attached to the garnishee order. If garnishee order is issued in the name of single individual, only the amount which is present in that individual account is attached to the garnishee order, not the joint order account. So this is the garnishee order, very important. So this is the complete chapter. Now if you have any doubt in the whole chapter, please ask. Annuity deposit is like systematic withdrawal plan, you can say. But systematic withdrawal plan is a proper mutual fund scheme. Annuity deposit is the customers or is the bank's product. Anything else? Everyone. Any doubt? See, if you have, please ask. Just a second, everyone. Okay, ma'am, please 5 minute break. Pratibha, I will take after some time. Okay, we have lot to finish because this is a very lengthy module, everyone. Okay, I will take after some time. Don't worry. Okay, now just a 1 minute break and then we will start. Just a 1 minute break, everyone. Okay, now I'm audible to everyone. Right. Krishna, I will be taking these as a case study in the final marathon, everyone. Okay, so there are either or survivor, there are different operational instruction like former or survivor, either or survivor, jointly or survivor. Don't worry, I will be taking it in a case study, or I will be just simply giving a small PDF for that. Okay, there's not very important thing to explain in that, so I will be taking it in a case study in the final marathon. Okay, right? So let's move forward and let's talk about the operational aspects of handling, clearing, and the collection of the cash. Only the most important thing we are going to discuss in this chapter. Okay. First of all, what is a CTS system? Check truncation system means eliminating the physical movement of the check completely with the digital image of that particular check. So instead of the physical movement of the check, we are actually instead of the physical movement of the check, we are actually moving the scanned image of the check throughout the clearing process. That is called as the CTS, check truncation system. So check truncation system, it is an electronic image of the paper check, right? Second, it is the complete replacement of the physical movement of the check. It can be done only in the clearing cycle. After the check is truncated, it is kept in a safe custody with the bank or the clearing house. And digital signature is not mandatory. To add the digital signature, it is just optional. Next, we have grid based clearing system. So in this we have three major grid means part or region. So India has three major grid: northern, western, and southern, which is given here, right? Now, who can participate in the CTS? So there are the banks, big banks, the member bank like SBI or HDFC, which are the direct member of the clearing house. They are participating directly in the settlement process. Then second, we have the sub-member bank, which are not considered as a direct member. They are participating via a member bank, right? So they don't have any settlement account. They just use the complete member bank infrastructure for the check clearing process. Then we have the indirect member. They have their own settlement account, but they are not the member of the clearing house. They are participating via the member bank, but they have their own settlement account. Next, we have the centralized way of truncating the check. It means that every branch just collect the check and send it to the central branch, and the check is being scanned and sent into the clearing process from there. That is centralized. Distributed means every branch has its own facility to truncate the check. The check is scanned in every branch. And finally, the hybrid, which is a mixture of centralized and distributed. Now, CTS process flow. What is the complete CTS process flow? So first, the check is in the hand of the presenting bank. The presenting bank do what? It just captured the image of the check and enroute this image to the clearing house. Okay. The clearing house process the complete data. Okay, arrives in a settlement figure and enroute that complete figure to the paying bank. Now, paying bank, if satisfied with everything, clear off the check immediately. But for example, if the paying bank is not satisfied with anything, they create a return cycle. Means paying bank return the check to the clearing house and clearing house return the check to the presenting bank. So this is called as presentation clearing. This is called as the written clearing. And presentation plus written clearing forms one complete clearing cycle. And the check is truncated only in that clearing cycle only. And the complete clearing cycle has advanced security feature to protect the check or the image or to ensure the safety and security of the check. And when the check is truncated at the time of truncation, the at the back of the check there is a two line Okay, two line, which is the unique or single line, which is a unique identifier of the check, is printed on the back of the check. That is CTS, check truncation system. Now, whenever the image is taken in the CTS system, we have to take two type of image. The bank or the clearing house, they have to scan the image in two measure type, grayscale and black and white image. And in these two type, we have three images: front grayscale, front black and white, and the back black and white. Right? And the image, they are actually gone with a rigorous quality check. If the image is not meeting the specification, they are returned. Okay. Next, CTS positive pay system. Positive pay system means reconfirming the details on the large value check from the issuer or the drawer of the check. If I have drawn a large value check, so the bank has to recheck the details, like who is the drawee bank, or the detail or the amount or the time period. This need to be rechecked in the case of large value check. The process of rechecking or reconfirming it from the drawer itself, it is called as the positive pay system. So if there is a check of rupees 50,000 and above, then the bank should offer this positive pay system facility to the customer, and it is dependent upon the customer's will whether they want to avail it or not to avail it. But if the check amount is 5 lakh and above, then it is compulsion. The bank has to do this positive pay system mandatory in the case the check amount is 5 lakh and above. But if the amount is 50,000 and above, then it is up to the will of the customer whether they want to avail or not to avail it. Okay. Now, we have certain RBI guidelines on the collection of the instrument. When the bank is collecting the checks or instrument on the behalf of the customer, then for this we have certain guidelines which are issued by RBI. Like for example, RBI said that every bank should have a proper board approved policies in the case of the collection of the instrument, which highlight the immediate credit or the time frame which is actually needed for the collection of local or outstation check. And if there is any delay, what should be the interest which is paid by the bank to the customer as a compensation. Second, if it is a check, the check is actually account pay check, so the bank need to submit the check only in the account of the name which is mentioned in that check. If the customer is demanding that please submit this account paying check in another account, so the bank need to reject that, and the fresh check, the demand for fresh check should be made by the bank from that person. Third, if the check is presented within 3 months of the date of issue, then only it is considered as a valid check, and a bank is liable to make the payment of that particular instrument. After 3 months, the check will become invalid. Okay. Next, if any check, instrument, or anything is lost in the clearing process, the first thing is the bank has to immediately inform the drawer so that the drawer can just issue a stop payment instruction for that particular instrument. Second, the complete compensation and the onus of the loss is actually in the paying bank. The bank has to compensate whatever the loss is actually bared by the drawer in case of the check which is lost in transit. Bill for collection. Yes, whenever there is a bill which is collected, to avoid unnecessary delay, the bill should be directly forward from the forwarding office to the realizing office. And finally, if there is any delay in the collection of the check, then the bank must pay the compensation, interest as a compensation to that particular customer, right? So that is the RBI guideline on the collection of the instrument. Okay, so if you have any doubt, ask everyone. Any doubt if you have in this chapter, please ask. Any doubt? Quickly tell me. If you have any doubt, ask. If you don't have any doubt, quickly give me a thumbs up. Everyone. Quickly, we have lot of things to do. Everyone, quickly. Right. So let's start the banker special relationship, everyone. So banker special relationship, first of all, we have the mandate. Okay. So mandate is actually an authority which is given by the account holder in favor of the third person. Right? For what? So mandate simply is an authority which is given by the account holder in favor of third person to perform certain act on his or her behalf. For example, I'm leaving to US tomorrow. So I want that on my absence, my sister should be managing some transaction in my bank account. I should have to inform the bank about this. So it is informed to the bank via a mandate. So in this, the authority is given in favor of third person. In my case, I'm giving my authority to my sister. So my sister is called as the mandate. Mandate is a, you can say, unstamped agreement, and it is issued for a shorter period of time. Next is the power of attorney. Power of attorney is the same thing. Means when there is one person who is called as the donor or the principal, execute a document in favor of the donee or agent and giving them the authority to perform certain function on his or her behalf, then it is called as power of attorney. What is the difference between mandate and a power of attorney? Power of attorney is usually given for a longer period of time. Mandate usually for a shorter period of time. Mandate, unstamped agreement. No stamping is needed, but power of attorney is a proper stamped agreement. Okay. So if something is done in a official capacity, power of attorney is needed. Something is done in a casual manner, mandate is needed. Okay. So we have general power of attorney, which is issued for more than one transactions, right? Like general power of attorney give the agent the right to sign the check or stop payment instruction of the check or to sign the borrower document. Whereas a specific or limited power of attorney means it is given for a single transaction, right? So that is the power of attorney. Now, what is a banker's lien, everyone? So, banker's lien is actually a right of the banker to retain the possession of the good until the debt of the debtor is fully paid out off. For example, I have received a gold loan from a bank. So I have given my gold jewelry as a collateral to a bank. So the bank has the right to retain the possession of my gold jewelry until I clear off my debt fully. That is called as the banker lien. So there is a general lien. General lien means bank can retain all the securities of the customer, okay, for that particular debt. Particular lien means the bank can retain only that collateral which is given by the bank to the customer. That is the particular lien. Next, right to set off. For example, if you have two account. For example, I have two account in the same bank, right? So one account shows a debit balance of 500 and another account shows a credit balance of 2000, but I have the account and that two account is in my name. So bank has the right to set off my debit balance of one account with credit balance of another account. That is called as right to set off. And there is one case which is related to the right to set off, and that case name was Muhammad Hussain Sahab versus Chartered Bank case 1965. Next, right of appropriation. What is a right of appropriation? Normally, for example, I'm a customer. I have two EMIs running in my account. Okay, one is for house EMI and one is for my car EMI, right? I have deposited a certain amount in my bank account. Now, normally when I have deposited a certain amount in my bank account, I usually have to give the bank this direction that this amount is need to be appropriated toward which EMI. Okay, I can give it expressively. Like for example, when I'm depositing, I am just leaving a comment in the comment section that please adjust my this balance towards the house EMI. or home loan, right? Or it is implied under the circumstances. For example, I have specifically 35,201 rupees as a car EMI, and I am depositing the same amount, 35,201, means it is understandable from the situation that this is a car EMI. Okay, this need to be adjusted towards the car loan. Okay, so customer usually have this power to give the direction to the bank that the balance need to be appropriated toward which debt. But in case I have deposited amount and I have given no direction, and neither it is understood from the circumstances. Now, in this case, the bank receives the right that they can just adjust this balance towards any type of or any EMI. The bank has the right to adjust it towards the car EMI as well or towards the house EMI, whatever the bank find it appropriate. So that is called as the right of appropriation. One case which is related to a right of appropriation is Dharavi Industry Private Limited versus Orissa State Financial Corporation. So this is right to appropriation. So this is the complete chapter. Very simple chapter. Okay. Now quickly let's talk about the Unit 9. Unit 8. Everyone, I will be giving the PDF of Unit 8 exclusively for all of you after this particular Unit 21, right? Because that Unit 8 is foreign exchange. This is for reading purpose only. Most of it we have already done in the IEIFS, right? So Unit 8 PDF I will be adding in the end, okay? Right of appropriation means the bank has the right. In case customer has not given any direction and the customer has deposited some amount, okay, and the customer has not given any direction, that this amount need to be adjusted towards which EMI, then the bank has the right to decide the appropriation. Means the bank has the right to decide that whatever the amount which is credited in the account of that customer, that balance should be adjusted toward which EMI. That is right of appropriation. Okay, right? So now let's move forward to the operational aspects of NRI business. Okay, so in this we have different type of account. Like we have the NRE account, non-resident external rupee account. It is an account which is offered to NRI or PIO for transferring their foreign income to India. They are earning abroad, they want to send their income to the family or friends or relative. For transferring that foreign earning to India, the NRO account is offered to NRIs or PIOs. This can be saving, current, recurring or FD account. Okay. Joint account, yes, it is permitted in the NRE account. FD, yes, you can have the FD in the NRE account, but the minimum time period you should hold the FD is 1 year. Then additional interest rate, it is not allowed. Okay, no, not neither for the staff, not for the citizen. Premature withdrawal option, yes, it is allowed, subject to the penalty. Next, NRO account, non-resident ordinary account. NRE account is offered to transfer the foreign earnings to India. NRO account is offered to the NRIs or PIOs for managing their income earned in India. For example, I am a NRI. I am working outside India. I have some property in India and that property is actually given on rent. Now, I have a proper source of income in India also. So, for managing my income which is earned in India, the type of account which is offered to the NRI or PIO is called as non-resident ordinary account, right? Yes, FD is allowed, but the minimum time period you should hold FD is 7 days. It can be a saving account, current account, term deposit or recurring account. Okay. Then additional interest rate is not allowed. Next is the FCNR account, foreign currency non-resident bank scheme. So FCNR account is actually a account which is a especially FD account or term deposit account. It is not a saving account, it is a term deposit account. For example, you are an NRI, you are earning in dollar. You wishes to maintain an FD account in India, but you want to retain the amount or the FD in the dollar. You don't want to convert dollar into rupee. You wishes to retain the currency in the same currency you have earned. Then the type of account which is offered to you is called as FCNR account, means the foreign currency non-resident account. It is a proper term deposit account, not a saving account. And in this, always remember the minimum time period for the FD is 1 year and the maximum time period is 5 years. Okay, so there are blocks: 1 but less than 2 year, 2 but less than 3 year, 3 but less than 4 year, 4 but less than 5 year, and 5 year only. Okay. Next is the NRO account. See, if you are a foreign national who are in a temporary visit to India, you are a foreign national. For example, you are temporary visiting India for 3 months for any tourist facility, right? So the type of account which is offered to you is called as NRO account. So NRO account can also be offered to the foreign national of non-Indian origin if they are temporarily visiting to India. Then what is done to the foreign national account when they are leaving India? Everyone. So in this, always remember, first thing is, when you are a foreign national and you are working in India, now you just leave your job in India and you want to just leave India. Okay, so your account is first of all redesignated as NRO account. Okay, and it is the credit is only allowed for the settlement of dues from your employer. Okay, then as soon as you leave India, the fund is repatriated outside India, and once the complete dues are cleared, that complete account is closed. Okay, the amount that can be repatriated outside India should be within $1 million per financial year, not more than that. So that is the foreign national account who is leaving India. Next is the opening of the account of individual and entities of certain countries. So if you are from Pakistan nationality, if you are a company who is owned or who is actually incorporated in Pakistan, then for holding an account in India, you need the approval of RBI. Second, if you are from Bangladesh nationality, again, your account can be opened in India, but you have to present your valid visa and residential permit. But if you are any entity of Bangladesh ownership, then opening your account needs RBI's permission first. And if you are a citizen of Bangladesh or Pakistan and you belong to minority committee, that sixth religion which is mentioned in the Citizenship Act, that is minority committee, and if you belong to Bangladesh or Pakistan, then your account can be opened in India, okay, and that need a long-term visa. You should show your long-term visa and your NRO account should be opened in India. It can be converted into the normal account once you receive the citizenship of India, right? Now, SNRR account, a special non-resident rupee account. So, SNRR account is basically offered to the foreign national, not to NRI, not to PIO. See, SNRR account is offered to the foreign national who are having the business relationship with the Indian entities. So if you are having a proper business relationship or a regular business relationship with Indian entity, then the type of account which is offered to the foreign national for maintaining their business relationship with Indian entity, this is the SNRR account. And because it is given for the business transaction, remember it is a type of a current account. It is a type of a current account. Okay. Next, there are restrictions. If it is a current account, no interest is paid, right? Second, you cannot transfer your fund from NRO to SNRR account. It is not allowed. The balance, yes, it can be repatriated outside India, subject to the payment of applicable taxes in India. That is SNRR account. Okay. Next, within $1 million per financial year, you can just easily remit money outside India. But if you want to remit in excess of $1 million in a financial year for any of the reason, like for example, if you have received any legacy or inheritance or anything, then it requires a special permission from RBI. In certain circumstances, I have mentioned these circumstances here. Yes, you are allowed to remit in excess of $1 million outside India. But in this case, you must take the permission, exclusive permission from Reserve Bank of India. If you are a citizen of Bangladesh, Pakistan or Afghanistan and you belong to minority committee like Hindu, Sikh, Jain, Buddhist, Parsi and Christian, you can purchase the residential property in India, one for residential property and one for your office work. You can purchase these two properties in India. Okay. But first of all, you should disclose your income in front of the revenue authority, that from where you have earned this money for purchasing the property in India. Second thing, that property should not be in any government restricted area like Kant area. That property should not be in that area. Okay. At the time of registration of that property, your original nationality should be mentioned. And sale of that property is only allowed once you become the citizen of India. Before that, you cannot sell that particular property. Okay. Finally, there are some investments which are prohibited for NRI and PIO. So if you are an NRI or PIO, you cannot invest your money in the lottery business, gambling, chit fund, nidhi companies, TDRs, real estate, activities which are not open to the private sector. So these are the certain sectors in which you are not allowed to invest, right? So this is the complete chapter. Any doubt, everyone? Any doubt in this whole chapter? If you have, please ask. If you don't have any doubt, quickly give me a thumbs up. Any doubt? Right. Now, let's talk about this particular chapter, cash management service. Only one thing in this chapter is important. NRE and NRO about the FD. Minimum time period you can hold in the NRE. The FD is 1 year. In the NRO, it is minimum time period 7 days. That is FD. Okay. And FCNRB is a proper FD account. Okay. Can these both account holder have an FD individually in their account? Yes. Jointly? No. Okay. Now, let's talk about the cash management services, everyone. So, cash management, what is a cash management? Only this is important. Nothing else in this chapter is important. The process of collection, concentration, management, and distribution of the cash, that is called as the cash management. And whenever a bank is giving the cash management services, they are just giving that cash management service for optimizing the liquidity. It means that you have to increase your cash inflow and you have to restrict your cash outflow. That is the main purpose behind this cash management service, right? Everyone. Done? Whatever the chapter is actually left, like unit 8 and 10, I will be giving the exclusive PDF for that for your reading purpose. Everyone, don't worry. I will be adding it in the last. Don't worry. Okay, because these are some things which you just have to read it out. Okay, the chapters has less work of me and more work of you, and that's why I'm just leaving that PDF at the end of this chapter so that you can just read it out. Okay, don't worry, everyone. Okay, optimization of liquidity means better management of the cash. We have to increase our cash inflow and restrict our cash outflow. Okay, now next is the payment and the collection of the check and other negotiable instrument. Important chapter. First of all, what is a check? So you know that it is a written instruction which is given by the account holder to the bank to make the payment, specific payment to the particular person from his or her account. That is a check. In a check, we have three parties. Drawer means the account holder who is drawing or making the check. Drawee means to whom the instruction is given that you have to make the payment. So in case of check, drawee is the bank and drawer is the account holder. And the payee means the one person who is entitled to receive the payment. Okay. Next, promissory note. What is a promissory note? Promissory note is the unconditional promise which is given in written by one person to another to pay a specific sum of money after a specific time period. That is called as promissory note. For example, A is giving written promise to B, unconditional written promise to B that I am responsible for returning 1 lakh rupees to you after 6 months. That is a promissory note. In a promissory note, we have two parties. The one person who is writing the promissory note, that person is called as the maker or the payer. Okay, that person is responsible for making the payment. And the one person who is receiving the promise, that person is called as the pay. The one person who is receiving the promise, that person is called as the pay. Means the one person who is entitled to receive the payment, pay. The one person who is making the promissory note, that is the maker or the payer. Now next, bill of exchange. What is a bill of exchange? Simple. A sells goods to B. A is a seller. A sells goods to B, buyer. So buyer says that, okay, I am going to return this money after 180 days to you. So for legalizing this transaction, A draws a bill of exchange on the buyer, instructing the buyer that you have to make the payment of this transaction to me after 180 days. So that is called as bill of exchange. Understand, bill of exchange is an instruction which is given in written to the buyer that you have to make the payment. Promissory note is the written instruction. The person himself is promising that I will be going to pay this money to you. Okay. So in bill of exchange, technically we have three parties. The one person who is making the bill of exchange, that person is called as the drawer. So seller is always the drawer. Okay. The one person who is receiving the instruction that he is responsible for making the payment, that person is called as drawee, means buyer is the drawee. And we have the third party, the person who is entitled to receive the payment. In this example, A is entitled to receive the payment. So A is the payee as well. Okay. So promissory note is a proper written unconditional promise to make the payment to a certain party. But bill of exchange is a written instruction which is given by the seller to the buyer that you have to make the payment after a certain time period. Okay. So that is the bill of exchange. Now, sorry. Now let's talk about what is a payment in a due course. Okay. What is a payment in a due course? So payment in due course simply means that you as a banker need to make the payment with the apparent tenor. Apparent tenor means whatever is written in that check. You have to make the payment in good faith. You have to make the payment without any negligence to the person who is entitled to receive the payment. That is called as payment in due course. If you have to make the payment after checking all the terms and conditions, all the thing which is written in that check, you have made the payment in good faith without any intention of fraud. You have made the payment without any negligence to the person who is entitled to receive the payment. That is called as the payment in due course. And if as a banker you have made the payment in due course, you are protected from any type of liability. In case fraud happened, you are not liable to give any compensation because you have made the payment in due course. Okay. Now, protection which is available to the paying banker. First of all, in case of forged endorsement, in the case of order check, if there is a forged endorsement, so there is an order check, okay, and then at this check there is a forged endorsement, okay. So if the endorsement is duplicate or if the endorsement is not genuine, but a banker has actually made the payment in full faith without any negligence with the apparent tenor, then the banker is protected from any type of liability. Why? Because a banker is expected to know the signature of its own drawer. A banker is not expected to know the signature of each and every person who is coming in the bank. So if I'm a drawer, I have written a check in name of B. Now B has endorsed this check to another person. For example, someone just faked the signature of B and endorsed that check in the name of C. And the banker is actually expected to know my signature. The banker has checked the signature and banker has checked the endorsement. If everything is appearing good, like for example, there is no overwriting, the date is correct, everything is looking genuine, you have checked it, okay, and you have made the payment in full faith without any negligence, without any intention of fraud, you have not neglected anything, and even if the endorsement is forged in the order check, as a banker you are protected under any type of liability. You are protected under section 85(1) of Negotiable Instrument Act. Next, in case of the forged endorsement in bearer check, what is a bearer check? Anyone who is presenting that check to the bank, that banker need to make the payment to that person. Okay, that is a bearer check. In a bearer check, endorsement doesn't matter because you know that a bearer check can be transferred to another person just by delivery. I am handing a bearer check to you, it is transferred to you. Endorsement is not needed. So whether the endorsement is forged or genuine, a bank is protected under section 85(2) in case of the bearer check because a bearer check is just delivered, so it is negotiable. The one person, even if that person is a fake person and that person is presenting you a bearer check for the payment, as a paying banker, you just need to check the instruction which is written in that check. If no stop payment instruction is given and everything is good, everything appears genuine, you have to make the payment to that person and you are protected under section 85(2) of Negotiable Instrument Act, right? Now, crossing of the check. So yes, a paying banker is protected under the crossing of the check under section 128 of the Negotiable Instrument Act if, first of all, that particular paying banker has made the payment in full faith without any negligence. Without any negligence means as a paying banker you have made the payment in the full faith by checking all the apparent tenor without any negligence. Second, you have see that whether the check is especially or generally crossed, you have verified everything. After verification, if you have made the payment of the cross check to the genuine party, means whose name is mentioned in that check, then you are protected under section 128 of Negotiable Instrument Act. But there are certain conditions in which a paying banker actually lose their protection. There are that thing. If as a paying banker you have made the payment of a cross check in the name of another person, like for example, I am coming with a cross check, okay, and I am requesting the bank, so since this is a cross check, you have to make the payment in the account. So just directly credit it into my account. The name is mentioned, like Pratibha's name is mentioned in that check. But I am requesting bank that since it is a cross check, you just directly make the payment to my account. And if the paying banker has done that, in this case, the paying banker has lost their protection. If I am not the genuine person and fraud happened, then the bank has to compensate the original person. So that is when you actually lose your protection in case of the cross check. Okay. So crossing, who can cross the check? So the holder of the check can cross it either generally or specifically. Okay. And if you want, you can just add the word not negotiable. It means that this check cannot be further transferred to anyone. Now, in case the check is a dishonor for the insufficiency of the fund. See, I am a drawer. I have drawn a check of rupees 1 lakh by but my account has only 30,000 rupees. Now, in this case, the bank has written my check, dishonored my check, and written the instruction that there is are insufficient fund. So, in this case, I actually made a crime. And in this case, I can send into the jail for a period of up to 2 years, or there can be penalty which can be imposed on me to twice the amount of that check, provided that these three conditions are followed. First, that person should present the check within 3 months of the date of issue of the check. And once the check is rejected, then there is a demand for payment which is made again within 30 days of the returning of that check. And when the demand is made, still that within 15 days I am unable to make the payment, then in this case I have committed a crime and I can sent into the jail for a period of up to 10 years, or there can be twice the amount of the penalty of that check which can be imposed on me. So that is the case of the dishonor of the check. Now, if you have any doubt, please ask everyone. Bearer means the holder of the instrument. Okay. Bearer means the holder of the instrument. Everyone. Okay. So can I take a 5-minute break now, everyone? Okay. So since it is a lengthy class, so can I take just a 5-minute break before moving to the next topic, everyone? Everyone, can I take a 5-minute break? Everyone. So, yes, let's just take a 5-minute break, everyone. Here, I'm just taking a 5-minute break. Okay. And then we will be continuing the class after this 5 minutes. Okay. Okay, everyone. Okay. Okay, now I'm audible to everyone. Yes. Now I'm audible to everyone. Kindly please comment, everyone. Now I'm audible. Pratibha, Ramaya, Moria, Naveen, Rinchin. Am I audible to everyone? Right. So let's start with this responsibility of the paying bank. Now, in this chapter, I have given 2 to 3 case studies, everyone. So that case studies is just for your reading purpose. So I'm skipping that case study because that is for your reading only. I'm just going to explain the main part of this chapter, right? So this is the case study I've given. You just have to read it out, okay? Nothing else. So this three main sections which I need to explain in this chapter. First is section 89. Section 89 of the Negotiable Instrument Act says that if there is any check which is materially altered, but it doesn't seems to be materially altered, and if the banker has made the payment in full faith without any negligence with the apparent tenor of that particular check, then a banker is protected under any type of liability. Like, for example, there is one particular check, and if any date is written, okay, and that date was perfectly altered into another date, but it was so perfectly altered that it doesn't appear to be altered, okay, and then a banker has made the payment in full faith without any negligence, then a banker is protected from any type of liability. This is a section 189. Okay, sorry, 6 is section 89. Now, section 10, already I have defined you what is a payment in due course. That is defined under section 10 of Negotiable Instrument Act. And section 31 says that if the drawee bank has the insufficient balance of the drawer present in its hand to make the payment of the check, okay, then the drawee bank means simply, see, whenever section 31 says that the drawer must have a sufficient balance in his account of the drawer to make a payment of a particular check when the check is duly required to do so. If the check is perfectly fine, it is made completely correct, then the drawee must make the payment of the check if the balance is available in the drawer account and it is perfectly available for making the payment. Means there is no blocking of the amount, no set off is there, nothing. The balance is properly available, the check is properly made, so the drawee bank must make the payment of that particular check. That is section 31. Okay, now this is another case study for your reading purpose, everyone. You just have to read it out, nothing else. Okay, now responsibility of the collecting bank, again a easy topic. Only something you need to know: which section give protection to the collecting bank? This is important thing. Which section is actually giving protection to the collecting bank? Section 131 of the Negotiable Instrument Act give the protection to the collecting bank. Okay, so in case the collecting bank has followed all the duties properly, means the collecting bank has opened the account with a sufficient document, they have done the complete KYC, they have ensured the crossing of the check, then after checking all this, the collecting bank is protected from any type of liability under section 131 of the Negotiable Instrument Act. Section is important. Okay, now ancillary services. Ancillary services means what are the add-on services which a bank is giving to the customer other than the main services which are rendered by the bank. What are the ancillary add-on services which a bank is giving to the customer? That is ancillary services. So in this we have a locker facility. as an ancillary service which is given by the bank to a customer. So let's talk about that locker services. Section 45ZC to Section 45ZF of Banking Regulation Act deal with the nomination of the locker services. So if the locker is operated by a single person, the nomination, you can say the nomination of that locker should be made only in the favor of one person. If it is a joint locker, then you can make the nominee more than one person also. In case this is a joint locker, you can make the nominee more than one person. Okay. Now, if in the locker, the rent is not paid for a complete 7 year. Okay, not rent, sorry. If the locker is not operative for a complete 7 year, means there is a locker in my name, but I haven't operated that locker for complete 7 year. So in this case, the bank is allowed to dispose of the material in that locker in the transparent manner, or transfer that locker's product to the nominee or legal heir and just allocate that locker in another name. If that locker is not operative for a complete 7 year, even if the rent is successfully paid. Okay. Second, if the rent of the locker is not paid for 3 years in a row, then in this case, first of all, the bank has to give a notice to the particular person in whose name the locker is, that you have to make the payment. Okay. If that person is not traceable, you have to give a notice in at least 2 newspapers. Okay. Even after that, the person is not trackable, then in this case, you can dispose of the material in that locker. You can transfer it to the legal heir, or you can dispose of it in a transparent manner, and you can just allocate that locker in another name. Okay. Now, custodial services, very easy. The very first chapter I have given you the bailer-bailee concept and the trustee concept, right? Custodian bank means when the customer is giving their asset to the bank for the safety and security of that particular asset. Okay. Now, in this case, the bank is giving the service of custodian bank, and the bank is acting as a trustee, or a bank is acting as a bailee. That is the custodial service. Portfolio management services, yes, a bank is allowed to give a portfolio management services to their customer. Portfolio management means a bank can recommend the thing that you can, as a customer, whatever the money you have, you can invest it into different type of financial instrument to maximize your profit and minimize your risk. But important thing in the portfolio management services is, first of all, in the PMS services, the bank cannot guarantee any return to the customer. Plus, whatever the money you are accepting from the customer, that should be for a minimum 1 year time period. Means you cannot invest that money into a short-term instrument. You only have to invest that money into the long-term instrument. That is the portfolio management services, right? So that is the main and important part of the ancillary services. Now, financial inclusion and financial literacy. First of all, in this, we have to discuss about the ultra small branches. See, what are the ultra small branches? It is not possible for a bank to open a high-tech branch in each and every area, right? So instead of that, RBI has given permission to the bank that you can just open a small brick and mortar structure, a simple infrastructure, which is called as ultra small branches in our rural areas, from where the business correspondent can work. And that ultra small branches should be open within 3 to 4 kilometers. Okay, means the main branch and that business correspondent location, means from where that business correspondent is giving services to the customer. Between these two, within 3 to 4 kilometers, you have to open a ultra small branch. You can open a ultra small branch. RBI has given that permission, right? Now next, we have talked about the payment. So already in the IEIFS, we have discussed about the payment bank. payment bank is a proper differentiated bank which is specialized in giving remittance services, especially to the migrant labor workforce. Okay, they can offer a small saving account to the customer. They can accept demand deposit from the customer provided that the maximum amount they can accept from the customer is 2 lakh per customer. They can give the bill payment facility, they can give the payment and remittance facilities, they can give the mutual fund insurance facilities, but they are not allowed to give loan. Remember this, they are not allowed to give loan. And the payment back from at least 25% of the branches of the payment bank should operate from the rural areas. Okay, so that is the payment bank. Now let's talk about the financial literacy. Financial literacy means giving awareness about the financial product and services. Okay, though financial literacy means when you are educating people about the product and the services, financial product and the services, that is called as financial literacy. Now always remember, financial literacy always creates the demand of financial product and services among the consumer. And when the demand is created by the financial literacy, then comes financial inclusion. Financial inclusion role is to provide the supply for meeting the demand of that particular people, right? So that is financial literacy. Okay. Now, under financial literacy, there is a rural self-employment training institute which has been established by Reserve Bank of India, and it is established under the Ministry of Rural Development. Now, under this Rural Self-Employment Training Institute, the training are offered that is demand driven. Demand driven means whatever is trending in the market and the employment is needed in that area, the demand is given. So, the training is given according to that demand in the economy, right? So, that is Rural Self-Employment Training Institute. Okay. So that is the complete chapter. Now, if you have any doubt till here, kindly please ask everyone and just give me 1 second. If you have any doubt till here, please ask. If you don't have any doubt, just quickly give me a thumbs up, everyone, whoever are watching this session. Everyone. Okay. Right. Now, let's talk about the next chapter, that is customer service guideline. Pratibha, insufficient balance check rejection only one time present in the bank. So I actually didn't understand your question. You just please clarify that question once again. Okay, just write it properly so that I can just analyze what you are asking. Okay, just please write it down once again. Now, customer service guideline. Customer service guideline, we have to discuss important part of this chapter. First of all, ATM transaction. So there should be 5 free transaction which is given to the customer, which include financial and non-financial transaction. And if you're using the other bank's ATM, then there should be 3 transaction which is free of cost, which is given in the metro center, and 5 transaction it should be given in the non-metro center, right? Second, for every transaction, successful transaction, PIN validation is compulsion. Okay. Third thing, there should be a proper complaint form which is given in that particular ATM. The telephone number of that person who is responsible for writing the complaint against that ATM. So that if the customer has any complaint regarding that ATM, that customer can file the complaint in front of that person. So telephone number of that help desk or contact person, it should be given, and there should be a uniform template which is describing that how you can file a complaint of this ATM to the relevant person. Next, if your ATM is out of cash for a period of more than 10 hours in a month, it should not be the continuous 10 hour. It should not be necessary that you should be continuous 10 hour. In an aggregate, your ATM is out of cash for more than 10 hours in a month, then that ATM attract a flat penalty of rupees 10,000. Next, in some cases, there are limited liability or which is charged from the customer in case there is unauthorized banking transaction. In some cases, a customer is entitled to have zero liability. For example, from my bank account, there is unauthorized banking transaction from my bank account. I am entitled to have zero liability if that fraud and negligence or deficiency was actually on the behalf of the bank. Even if I am not reporting that transaction, but the fraud or the deficiency is actually on the behalf of the bank, or if there is a third party security breach which has happened, then in this case a customer is entitled to have zero liability. The bank cannot charge a single penny from that customer. But in this case, in some other cases, the customer is entitled to have a limited liability. Now let us understand that if other than this there is any unauthorized banking transaction, and if the customer has reported that transaction within 3 days, understand, if the customer has reported that transaction within 3 days, then in this case the customer is entitled to have zero liability. Not a single penny can charge by the bank from that customer. But for example, a customer has an unauthorized banking transaction other than this situation, and the customer delay in reporting the transaction, and that customer delay means the delay happened like the customer is reporting the transaction between 4 to 7 working days, then a customer is entitled to have a maximum liability of this amount. Means if you are a BSBD account holder, the maximum liability can be 5,000. Saving bank account or the credit card, if the limit is up to 5 lakh, the maximum liability is 10,000. If the credit card has a limit of over and above 5 lakh, the maximum liability can be 25,000. So, in case the customer has reported the transaction between 4 to 7 working days, then this can be the maximum liability that can be imposed on the person related to the different account. But for example, if the customer is reporting that transaction after 7 working days, now in this case, the bank can even charge the full amount from the customer. Now it is depending upon that bank. So these are the 3 cases, very important for a case study, very important. Okay, remember. Now this is the most important part of this chapter. Okay, now next is duties and rights of the banker. So duties and rights, first of all, we have the duty of secrecy and confidentiality. As a banker, you have to maintain the secrecy and confidentiality of the customer account. But in some cases, you are allowed to disclose some relevant fact related to that customer account. What are these cases? For example, if you as a banker receive any notice from the court or income tax office, then you have to disclose the matter related to the customer account. It is perfectly allowed for you. For example, if it is the interest on the means if it is in public interest, for example, there is any one company which goes insolvent. Now this you have to disclose it in front of the public. Third, if this is as for your own protection, like for example, a bank is going through any case, a customer has done any case to the bank. Now for the bank's protection, the bank has to disclose certain fact related to that customer. That is perfectly allowed. Or if the customer has given the express or implied consent, then the bank is allowed to reveal the detail of that particular account. Okay. Next, BCSPI Banking Code and Standard Board of India has been set up by SS Tarapur Committee. So Banking Code and Standard Board of India, BCSPI, now it has been replaced by Charter of Customer Right. The RBI under the Customer Education and Protection Department issued a Charter of Customer Right, and when this is issued, BCSBI has been replaced by COCR. Remember, Okay, these are the important part of this chapter, right? Now, if you have any doubt till here, please ask everyone. Any doubt? Everyone, just please ask. If you have any doubt, ask. If you don't have any doubt, just quickly give me a thumbs up, everyone. Or ask your doubt. Simply ask your doubt. Whatever doubt you have, just ask your doubt. Troy can go to the court after 3 years against dishonored will. See, there is a concept which is called as the, just a second, the act is called as what? Just a second, give me 1 minute. The act, law of limitation. Yes, sorry. I just skipped that word. Law of limitation is there, right? So every case need a maximum time period within which you have to go to court if you have anything. Okay? So in the case of dishonored of the check, the law of limitation, I need to just check. Law of limitation. What is the time period for the insufficient balance? Yes, no, 3 year. So just a second. If I actually exactly not finding what is the law of limitation. So the law of limitation describes that you need to file the case, I think within 3 year. After 3 year, it is not allowed. So law of limitation actually applies here, everyone. Okay. Okay. Rinchen is saying that, ma'am, unauthorized transaction, the customer penalty. Very simple. See, if you have reported the transaction within 3 days, no penalty on you. Okay. If you have reported the transaction between 4 to 7 days, then the maximum liability that can be imposed on you, in case if you are a BSBD account holder, it is 5,000. In other cases, I have written it there. Okay. And if you have reported the transaction after 7 days, okay, if you have reported the transaction after 7 days, then the bank can even charge the full amount from you. Okay, that is unauthorized transaction. Okay, can we move forward? Can we move forward, everyone? Transaction inward or not? Unauthorized transaction means your balance is deducted from your bank account, but you haven't done that transaction. For example, your credit card is misused. That is the unauthorized transaction. The balance is deducted. That is the unauthorized transaction. Okay. Now, let's quickly talk about this Unit 19, everyone. Okay. So, grievance readdressal and RBI integrated ombudsman scheme. The very important part of this chapter is the RBI integrated ombudsman scheme. So, RBI integrated ombudsman scheme, earlier there were 3 schemes. Okay. 3 schemes, like the normal ombudsman scheme, the ombudsman scheme for non-banking financial company, and the ombudsman scheme for digital transactions, right? These 3 schemes have been merged, and then there was RBI integrated ombudsman scheme 2021, which is formed, right? Now, in this, the RBI can appoint any of its officer as a ombudsman, which is appointed for a maximum of 3 year time period. In this RBI integrated ombudsman scheme, there is CRPC Chandigarh. Any complaint you are filing under this scheme first is received by CRPC Chandigarh. Then RBI has the power to define the power and the authority of the ombudsman. It means that the ombudsman is only allowed to take that matters which is forwarded to them by CRPC Chandigarh. Even if any complaint is receiving by the ombudsman directly, first they need it, that ombudsman need to forward it to CRPC, and then CRPC forward it, that complaint, to the respective ombudsman. Then the ombudsman, what are the proper procedure of filing a complaint in front of the ombudsman? So there is an online portal, cms.rbi.organization.in. You can file a complaint there, or via email, or via courier or hand delivery. You can file a complaint in front of the ombudsman. Okay. Now, that ombudsman is required to maintain the confidentiality of the information which is given to them by the complainant. But in some case, again, it is allowed. First of all, if that ombudsman is receiving any notice from the court or from any income tax officer that you have to disclose certain information regarding to this complaint, then as an ombudsman, you are allowed to do so. Or when the party, the complainant himself or herself has given the consent that, okay, you can just reveal my complaint, so you can do that. Other than that, a ombudsman is required to maintain the confidentiality of the information, right? Now, first CRPC is always receiving the complaint. So some complaints, these are not in the form of complaint. They are either giving some suggestion, or they are either asking some guidance. So that complaint is actually not considered valid and it is rejected by CRPC. Second, if the complaint is not maintainable, means certain complaints are there which is not on the permitted ground. So that complaint is again rejected by CRPC Chandigarh. Only the valid and the maintainable complaint, that complaint is forwarded by CRPC Chandigarh to the ombudsman for the resolution. Okay. Now, the ombudsman, what is the award? First of all, the ombudsman can announce the whole amount which is involved in the dispute as a compensation without any limit. Second, if there is any direct loss, direct financial loss, then the ombudsman can announce the maximum compensation of rupees 20 lakh, not more than that. And in case there is any other thing, like for example mental anguish, or there is any other expense, in this case the maximum compensation which can be given by the ombudsman is 1 lakh rupees, not more than that. Very important, these amounts are very important. Whatever the award which is decided by the ombudsman, a copy is sent to the complainant and the other copy is sent to the regulated entity. And they need to accept that award within 30 days of receiving the copy. If that complainant fails to do that, then the award will lapse and he will receive nothing. Now, if as a complainant you are not satisfied with whatever the decision which is given by ombudsman, for example, he has announced 5 lakh rupees compensation, but you are thinking that the compensation should be 7 lakh or 10 lakh. So you can file a complaint against that, or not complaint, you can just file an appeal against the order of ombudsman in front of appellate authority. Okay. Then appellate authority give more 30 days to finally settle out for that complete claim, right? So that is RBI integrated ombudsman scheme, which is very important. Okay. Now some complaints are there which can be rejected by the ombudsman himself. Like for example, if ombudsman is thinking that there is no deficiency of services, or if the ombudsman is thinking that the complaint is without any due diligence, or there is no loss in the complaint, or there is no deficiency in the services, or whatever the compensation which is there is beyond the limit of the ombudsman, so then in this case the ombudsman can reject the complaint directly. Clear? So that is RBI integrated ombudsman scheme. Any doubt, everyone? Any doubt? Quickly tell me. Any doubt? Shubha, which last slide? This one? Any doubt? This one? This slide or anything else? What you are saying? Right. Simply, there are some complaints which can be rejected by the ombudsman himself. Like, for example, if the ombudsman is thinking that the complaint is done without any due diligence, or there is no deficiency in the services, or the complainant is doing a complaint without any matter, or there is no financial loss, then the ombudsman can reject the complaint directly. Okay, done? Clear? Done, everyone? Right. So now, these are the two unit, Consumer Protection Act plus Right to Information. A very simple thing, just you have to read it out. How many members should be there, the amount. I have written the complete thing. It's very simple, just you have to read it out once. What is the penalty, what can be charged, etc. Very simple. These 19 and 20 chapter, I have just sorted it down to the most important information that you need for your examination. You just have to read it out in this chapter, right? So this is the complete module A, right? So unit 9, 20 and 21, you just have to read it out, plus unit 8 and 10, I will just give the add-on PDFs to all of you, right? So this is it. This is the whole module A for every one of you. Now, if you have any doubt, you are allowed to ask your doubt, everyone. Any doubt if you have, kindly just ask your doubt. I will just add down the PDF, okay? You just have to read it out that once, okay? Everyone. Don't miss out it, okay? Just read it out. Okay. So I have added the PDF after this, right? So after this, we have added 8 and unit 10. So this 19, so it's 20 and 21 chapter and your 8th and 10th chapter. I have just added the PDF in the end so that you can just read it out once, okay? And you are good to go. Your complete module A will be finished, okay? Just after this class. Just after this class, right? Yes, I have added the PDF. Don't worry. In this same PDF, I have added, right? Like this. Same PDF, I have just added. Okay, after this, I have added the 10th unit also. Okay, this is the same PDF you are getting. You are getting everything here. Okay, so any doubt, everyone? So this is the complete module A. We have finished the whole module A. Now we have to start the module B, and that I will be starting in tomorrow's session, everyone. Okay. So thank you so much, everyone, for attending this session. The tomorrow's timing will be from 7 p.m. onwards. Okay. AFM capsule batch, it is a recorded one in English medium. I am clearing your doubt. In English medium, it will be the recorded one. In Hindi medium, it will be the live classes. Okay. So if you want to attend the live, you can just go to the Hindi medium section. And in this English medium, it will be given to you in the recorded format. Okay. Right? Okay. So thank you, everyone. Thank you so much. We have done module A. Okay. No, there will be no morning session. In the evening from 7 p.m. onwards, we will be having the module B classes. Okay. Okay. Yes, AFM from 8 p.m. onwards in the Hindi medium. I am talking about the PPB class. From tomorrow onwards, it will be from 7 p.m. onwards. Okay. Right. So, thank you so much, everyone. Thank you so much, guys. Take care, everyone. Thank you so much. Then meet you in the tomorrow session. Tomorrow session will be live only on the app. It will not be live in the YouTube. So, everyone kindly join that particular session in the app. Okay. Thank you so much. Thank you. Take care. Bye bye, guys. Bye, everyone.